Hi there, welcome to Kneppy Invest, and welcome to three companies on the ASX that released interesting or intriguing Appendix 4Cs, all 5Bs, but I think in this case it was mostly 4Cs, if not all 4Cs, for the June quarter 2025. I am recording this video on the 9th of August at 11:30 a.m., intending to release it towards the start of October. Okay, so the three companies I'll be featuring in today's video include Dubber, which is an interesting quarter for this company because previously they did mention they were heading towards becoming operating cash flow positive, and I wanted to see if they were heading towards that particular inflection point. We'll have a look at RMA Global. On occasion, I will mix this up with RPM Global, but this is a much smaller company, RMA Global. And then we'll have a look at Fluence, and there is actually another company listed on the NASDAQ that is also called Fluence, and that is a Simons and AES company. I'm pretty sure this is listed on the investors. Yeah, it's listed on the NASDAQ. There he goes. NASDAQ CMFLNC. So don't mix those two companies up. Fluence is a water and wastewater solution company, and there seems to be quite a few of those on the ASX. So what I'm going to do in this video is I'll briefly go through what these companies do. Then we'll have a look at their Appendix 4C for the June quarter, and then their cash receipts history, and then the chart. Okay, so let's start off with Dubber. And this was a really interesting story in 2020, 2021, because this company was really growing their receipts at a really nice level. And at that point in time, the market didn't care about profitability, cash flow. They just wanted to see growth. And this company had growth coming out of their, well, you know what. And that's why the share price of this company went absolutely bonkers. I'm pretty sure the market cap of Dubber at one point reached something like $400–500 million. Now, that all shifted when interest rates started to rise. And unfortunately, Dubber couldn't really adjust to those changing sentiments, and the share price of Dubber fell significantly. But they are possibly getting close to an inflection point. Now, this company is, how should I say, a voice recording. So not really, yeah, voice recording, and I think they say conversation AI. So we could call them an AI company. So you can see on the website, voice recording with powerful AI insights. Anyway, so that's what they do. So let's have a look at the companies most recently, Appendix 4C. Now, I'm recording this video on Saturday morning, and CommSec is down for maintenance, still not back up, but I can rely on Market Index. Now, what I'm going to do is just go back to their March quarter Appendix 4C, and receipts 10.6 million, but they did, or were operating cash flow negative by 8.9 million, and staff costs were 10.7 million just in this quarter. So in fact, staff costs in this quarter were greater than receipts. But they did mention in the commentary that this cash burn was coming to an end, in particular to something, I think it was like PayYG or something like that. Yeah, here we go. Significantly reduced normalized cash flow from operating activities in the quarter, excluding historic ATO PayYG payment. There it is, ATO PayYG historic payment, 6.8 million in the third quarter, 0.6 million in the second quarter. So that did have an effect on the operating cash flow of this company by a fair bit. In fact, you can see this little graph on the side here that reported revenue and total cash-based costs were starting to come together. And that's a very important thing. If you go back to financial year 23, they're well apart. But back, and that was the same back in 2020, 2021. Back then, the market didn't care. Now the market cares. So the main thing I was looking for when it came to Dubber's Appendix 4C was whether this company was getting close to that inflection point. So let's have a look at their Appendix 4C for the June quarter. Receipts actually did climb up to 11.855 million, and the company operating cash flow negative by only $526,000. And in this quarter, staff costs only 5.7 million. So that has decreased significantly. Now, I think in this case, you can't really look at the year to date because cash burn just in operations 21.7 million. So this is a company that has really pared back their costs. In saying that, their receipts or the revenue hasn't fallen away. Now, in also saying that, they did lose a recent contract. Where is it? Business update on the 5th of June. I think it was that one. No, it might have been the 25th of July. 20th of May, sorry. Customer update announcement. I'm pretty sure the share price did drop on that day. And yes, advises that Virgin Media at O2 verbally confirmed that it would not renew their existing agreement to provide core recording and wholesale SIP services. So the share price actually of Dubba did drop on that particular news. But the main thing here is the company is much closer to being operating cash flow positive, and they are expecting to possibly go over that inflection point soonish rather than lateish. Now, not a lot of spending when it comes to investing and financing activities. That's good. Cash on hand did drop to 10.9 million, so they're still burning through a little bit of cash, but nowhere near as much as what they were doing the previous quarters of the year, and not much debt. In fact, no debt at all. In fact, they do have unused financing facilities, but no debt at this point in time. Okay, so that is the company's Appendix 4C commentary, which I actually haven't gone through yet. I did go through the most recent quarter, the March quarter commentary. I just wanted to see what they are saying in this very quickly. VMO2 mobile recording contract non-renewal will impact gross margins by 7 million financial year 26, offset by further 4 million cost savings. So they are cutting back their spending. And see if they've got any nice little, talking about gross margins, direct costs, and direct costs are dropping as well. There's operating costs dropping. In fact, they've been dropping for the last few years from $20 million a quarter down to about $7-8 million. So they've really cut back their costs. Now, why didn't they do that a few years ago? Who knows? Again, they probably didn't care. At that point in time, the market didn't care, but now they care. So that's why the company is changing, going through the quarter cash flow, which we've already done. Any sort of abnormal costs? Not really. There was $500,000 in other abnormal cash outflows. And that included redundancies, payments to SROs for payroll tax and legal costs. So nothing significant there. Oh, that's right. Ongoing investigations into the misuse of funds. Was this the company that had the CEO who run away with money or something? Okay, that does ring a bell. Okay, now onto the cash receipts history for Dubba. So this company goes back a fair way. So all the way back to 2015. So in a way, I've been following this company for about 10 years. Now, back then, I really wasn't closely following this company because I had very little receipts. But if you go back to 2020, particularly late 2020 into 2021, receipts were growing at a fantastic rate. In fact, receipts per quarter went from the mid ones up to $9.1 million in 1 year, almost 1 year. And that is why when you have a look at the chart in a second, we'll have a look there, you'll see the share price of this company just went bonkers during that period. Now, in saying that, there is a trend up. There is still a trend up. So this company has decreased their costs, but the trend in receipts have been growing. That's exactly what you want to see. A company that can continue to grow but have decreased spending. In fact, if they can continue to decrease their spending and continue to grow their receipts, that would be really good news for this company. So I think the main thing about decreasing the spending is they are not able to grow as quickly as they were back in late 2020, early 2021. So the main thing here is Dubba is a growing company. There is a trend increase in receipts. Now onto the chart. By the way, this company has a markup. I always forget to do. 52.5 million, ordinary shares 2.6 billion. So it's not richly valued right now. Share price about 2 cents. But at one point, 2020, 2021, the market of this company was insanely large. So if you have a look at the weekly chart, yeah, so back in 2021, so September 2021, share price was almost $2. So the share price has pulled back 99%, which would seem, yeah, that seems about right, from $2 to 2 cents. Yeah, so this, I don't know if you can include market cap on this. Now, if you really want to see the market, I know there's one way you can see it, and that is by looking at Fiscal AI. I'm pretty sure you can do it in TradingView as well, but I definitely know you can do it in Fiscal AI, because on the right-hand side, there's this nice little graph like this, and it shows you the price, but it can also look at market cap. And yes, this company had a market cap of, $1.24 billion. I didn't realize it was in the billions. This company had a market cap of $1.254 billion. So this was definitely a story stock, even though they were growing. And you can just see what happens when the story changes. The market cap of this company has gone from 1.24 billion down to 53 million. Oh, gee, I didn't realize it was that bad. Anyway, so let's have a look. I'll go back to the chart for this company, and you can just see how the share price has dropped a lot. So the main thing I'll be looking for here, you can see from late 2020 into 2021, the share price increased significantly, and that was based off just growth in receipts. The market didn't care. The company was just going through cash like there was nothing else. And if you don't believe me, what I'll do is I'll go to one of those quarters back then. What I'll do is go to one of those quarters. We'll go to maybe the Appendix 4C for the January quarter. And so receipts were growing. In fact, what I'll do is we'll have a look at the cash receipts history, and we'll go to the September quarter 2021. September quarter 2021. Let's do that. So September quarter 2021, which means we have to look at I wanted only price sensitive. There we go. September quarter 2021, which means October 29th. And this company, so even though they had receipts of $9 million, they did burn through cash of $5.6 million in that quarter. And I think it was even worse than that in other quarters. So this company was burning through a fair bit of cash back then. So the market didn't really care at that point in time. It was all about growth and receipts, and the company didn't care. And then interest rates started to rise, and that's why the share price dropped like a rock. If we go to the daily chart, you can see share price dropping significantly when they lost that contract. And the 20th of May, share price on the day fell 44%. Looks like it has found a bit of a floor, and the floor in the share price is around about 1.6 cents. So not much higher than where the share price is right now. Okay, let's move on to RMA Global. For some reason, I thought this company had something to do with cars. I don't know. I'm completely wrong, because this company has something to do with real estate, bringing transparency to the world of real estate. We're ambitious to grow our existing subscriber base, expand into new markets, and make our platform an essential provider to real estate agents. Other than that, I have no idea, because this particular website is not that crash hot. Because that's there. Here we go. They have Rate My Agent. Is that all they have? So Rate My Agent. So this is sort of like a customer feedback thing. Positive customer feedback is a real estate agent's most powerful marketing tool. So Rate My Agent is all they have? Don't know. Anyway, so let's have a look at RMA Global. That sort of makes sense, because RMA Rate My Agent. So it seems like this company is just about allowing you to rate agents. Okay, so you can sort of see that this is really the first time I've ever looked at this company. RMY is the ticker code, even though it's RMA, and that also confuses me. Markup of this company is about $30 million. Shares on issue 664. So let's have a look at the most recent Appendix 4C and why I've included this company in this particular video. And obviously, they must have been operating cash flow positive. Or they were. Not by a lot. Not by a lot. So receipts, 6.1 million. So it looks like a lot of people are rating their agents. And operating cash flow negative 32 million. No, 32,000, not million. And for the year, they were operating cash flow positive by 258,000. But that's including government grants and tax incentives. So this company is right on that inflection point. Right on the inflection point. I'm wondering if they've been on this inflection point for a while. It does look like receipts are growing based off the quarter, or comparing the quarter to the year to date. Any spending in investing a little bit, and financing activities a little bit. Looks like they did a couple raising during the year, increased the cash by 3.3 million, and cash in hand is about $4 million at the end of the year. Any debt? No debt. They didn't put zeros, they just put not applicable. What about the commentary? So first thing they mentioned in highlights is positive operating cash flow for the full year. And that's understandable. If you want to really yell that out, we are operating cash flow positive. Here it is. Put it in the first bullet point of the highlights section. And then they also mentioned revenue growth. So things I like, things I'm looking for, operating cash flow positive, revenue growth. And they've mentioned that in the first two bullet points, exactly like I want to see. Apparently they have a US subscription. So this is global, it seems like. And even in Australia and New Zealand, 11% growth in revenue. And that US subscription revenue rose 55%. So there's a bit of growth in this company. Talking about quarterly performance, I'm looking for any sort of graphs. So this is group revenue by product, subscriptions, and promoter. So it looks like revenue has been slowly climbing. A nice little jump up a few quarters ago. But other than that, very slow growth. By geography, Australia, New Zealand, USA. So it looks like they're just in 2 geographic regions, but primarily in Australia, New Zealand. Talk about USA. Here is USA revenue by growth. So actually nice growth here. So we'll call it good growth, not great, good growth. And anemic growth in Australia and New Zealand. And here we go. Cash flow and a net cash position. So this is operating cash flow. So it looks like they've hit this inflection point within the past 4 months. And because it's been fairly low operating cash flow, I haven't really paid attention to this company. So it does look like just based off operating cash flow, this company has hit that inflection point in the past year. And they've also got a cash receipts history over the past 4 years. A little bit different than the way I do it. But you can see here that financial year 25 has been a pretty good year compared to the last few years. And operating cash payments. Anyway, so let's have a look at this company's cash receipts history. So RMY, as I mentioned before, RMY. And this is the company's cash receipts history. And it goes back a while, so back to 2018. And maybe I'm being a little bit unfair on this company because it's actually really nice growth in receipts. It's a nice steady growth. Now, of course, you don't see growth in every single quarter. In fact, this last quarter was a little bit lower. The receipts were a little bit lower than the previous quarter, but 2 record quarters. Well, not consecutive, but the 2 best quarters this company has seen has been the last 2 quarters. In fact, the last 3 quarters have been the best 3 quarters this company has experienced. And we have seen that little pop up in receipts in the last 2 quarters. So 5.2 million up to 6.4, down 6.1. So that little increase is interesting. Maybe a little bit more momentum in the company, maybe an acquisition or something like that. But receipts have been growing through the last 7 years. And this is exactly what I want to see. Now, I want to see a little bit more scale now. That's what I want to see. I want to see the company increase their receipts or their revenue at a greater rate than they're spending. And that would be the point where I'd say this company has made it. So rate my agent or RMA. I don't think I'm going to forget that anymore. Okay, so that's the receipts history. Now onto the chart. And I have a feeling this chart, actually, I have no idea. I have no idea about this chart. Yeah, interesting. So share price was in a downtrend, and then all of a sudden the share price has popped up. Now, possibly the share price has popped up on the back of their Appendix 4C, but we haven't seen really big volume coming through for RMA Global. So at 4.5 cents, yeah, 4.5 cents. Yeah, so share price has popped up, a little bit of pullback on Friday's session. And the one thing that's lacking here is volume, but I don't mind this. I just need to see this little momentum being sustainable. And I'd have greater confidence in that if we saw some higher volume coming through. So the daily chart doesn't look half bad. What about the weekly chart? It's been listed for a while. And in fact, the weekly chart looks pretty negative. In fact, it's been looking pretty negative since the start of 2020. Share price has dropped from 60 cents to 4.5. So still in a weekly downtrend. But we did see that big spike in volume in June. That could be a sign that maybe the bottom is being reached. And we have seen a subtle increase in volume. If you have a look at the volume since about October, November last year, there's been a subtle increase in volume. That could be a good sign as well. Okay, so that's RMA Global. Maybe one to put on my watch list just because they're very close to that inflection point and the receipts history does look interesting. Okay, next company I'm going to look at is Fluence. This is a water treatment company. Yeah, water treatment. I suppose water and wastes, water treatment or management. So they talk about sustainable water treatment delivered anywhere, optimizing water management. I'm pretty sure their technology is mobile. I could be wrong. So water treatment, desalination, wastewater treatment, lagoon treatment, reuse, waste to energy, food and beverage processing, municipals, commercials, industrials, products and technologies, decentralized water treatment, NIROFlex desalination building blocks, NIROBox smart containerized plants. The one thing I do remember about this company when I looked at it many years ago was just the ability to be mobile with their technology. Maybe I'm a little bit wrong with that, but that's how I remember it. Revolutionizing wastewater treatment. Yeah, this is sort of what I remember. This sort of like these little boxes. And this doesn't look like mobile, what I'm looking at now, but I could be wrong. It was many, many years ago I looked at this company. Anyway, so this is another waste and wastewater management treatment company on the ASX. And I first had a look at this company many, many years ago. You'll see that the receipts of the company can be really lumpy, really lumpy. The markup of Fluence is 58.61 million, or shares on issue about 1.1 billion. So let's have a look at why I've included Fluence in this particular Appendix 4C video. We'll have a look at their quarterly, and then we'll also have a look at maybe the presentation. Yeah, let's do that. Okay, so company was operating cash flow positive by a fair bit. So receipts, 23.8 million. Now, here's a problem. Receipts can be quite lumpy, but they were operating cash flow positive in this quarter by $5.1 million. That's a fair bit for one quarter. If they can contain or maintain that momentum for the whole year, that's a fair bit of cash flow in a year. Now, I would have thought that this company does spend a fair bit of money on capital expenditure, but not much in the past 6 months. By the way, this is only 6 months of data, not a whole year. Cash on hand, about 12.7 million. So all that cash flow or operating cash flow, probably the best way to say that is most of that operating cash flow fell to the bottom line in their bank account. So cash on hand, 12.7 million. Do they have any debt? They do have a little bit of debt, $20.2 million of debt and not much unused financing facility. So that is something to keep an eye on as well, particularly with a company, particularly for a company with a markup of only $50 odd million. That's a fair bit of debt. Okay, let's have a look at their presentation just to see if there's anything in here. Sustainable water solutions. So just talking about summary, business segments. So they do have a few business segments here. It looks like that some of their client base include Veolia. That's the only one I've heard of here. That's okay. Veolia is a worldwide company. Transition to higher margin segments. Oh, that's interesting. So higher margin segments. So apparently the large projects, the Ivory Coast projects, are very low margins, and they are transitioning to the higher margin projects. So smart product solutions, NiroBox, proprietary smart product solutions, Aspiral, Subre, wastewater to energy, waste to energy, and recurring revenue. Treatment as a service. There you go. So many as a service things out there. And here's another one, treatment as a service, or TAS. O&M. I just made up that TAS. So high margin, capital efficient, highly attractive RR model. Strategic position. Okay. And that's about it. Okay, so that's actually is interesting that they are doing that, because I do like companies that do have high margins. Okay, now onto the cash receipts history for Fluence. And you'll notice here, I've already sort of hinted at that receipts for this company can be quite volatile, quite lumpy. And that is the right ticker code, isn't it? No, sorry, wrong ticker code, FLC. I put in FLU. So let's have a look. Yeah. So you can see that there was a really good quarter a few years ago. In fact, that was in the December quarter 2020. Receipts 75.3 million. If you took that blindly, that quarter's, and you just saw they're probably highly operating cash flow positive, you would have run the bank and poured all your money into this company. But since then, you can see receipts going up and down. Some bad quarters in there, but even though some bad quarters, the worst quarter receipts $9.8 million, but then usually followed by pretty good quarters. Now, in saying that, there was 4 quarters where receipts were pretty low. So a fair bit of lumpiness when it comes to Fluence and the cash receipts, and that is a slight red tick against them, although I do like they're going into higher margins. So even if they go into and maintain those high margins divisions, even if they do have a bit of lumpiness in receipts, they still might be able to be profitable and operating cash flow positive. Okay, now onto the chart for Fluence. And I have a feeling this is not going to look good, because I don't remember last time I looked at this chart, probably a few years ago. And this is understandable because this chart looks ugly. In fact, it's looking ugly for a while. Well, that is a weekly chart. So weekly chart looks ugly. In fact, I put this line here many years ago, a downtrend line. Not sure when I put it there, but it was a long time ago because it's a solid. And I transitioned from solid trend lines to non-solid trend lines quite a few years ago. And yeah, this chart has been looking ugly for a while. Share price at one point back in 2017, $1, and now it's 5.4 cents. And daily chart, a little bit of life on the daily chart. There has been a little bit of life on the daily chart. Now, we did see a big volume coming through, or relatively big volume coming through when the share price took off, but the volume has pared back. I'd just like to see maybe some volume coming in, and this could be signifying that there might be a new uptrend coming for Fluence. Okay, that is all I have for this look at 3 interesting or intriguing Appendix 4Cs for the June quarter. Dubber, RMA Global, and Fluence. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.